Alright, so let's start the next topic, which is the silver bullet. Market maker models are swing points. So over here we've got a depiction of a swing high, right? So think about the previous lessons as well. Think about those buy stops resting above an old high and those sell stops below an old low. We want to take out those buy stops first, right, to pair them up with the sell stops. Now, importantly, in a swing high, we want that second candle to close inside the range to focus afterwards on that third candle, be an expansion lower, to go into those sell stops of that candle's range, right? So we want to pair up the buy stops with the sell stops. And again, important, the second candle needs to close inside of the range. Now, this third candle takes out the sell side liquidity already, but if it does not, we can still focus on the fourth day, which should also be an expansion lower. So the third day will be most of the time a classic sell day after that second candle closes inside of the range. So let's head over some examples. We've got a GBP CAD weekly chart over here. As always, I keep repeating it, but it's very important. You need to mark out your premium and discount of the range, right? So we have this range low over here and a range high up here. So what are we going to be focusing on? Again, think about external range and internal range liquidity, right? So we're going to see where the sell stops are taken and where the buy stops are taken. So first of all, we've got that weekly swing low external range liquidity rate down here, right? So we've got us closing inside this range, and then we also have a weekly fair value gap here. So we go from external back to internal range over here. Now going into the daily time frame, we want to be waiting for that swing, right? We want to have that second candle take out the low and then closing inside of the range. So again, we've got that SMT. We've got that weekly external range liquidity as well, which has been purged over here. And now we want to go from external into internal range liquidity. And we're going to focus on the swing over here. You can see one candle higher, one candle lower, and then the third candle is higher as well. So we have that 1, 2, and then we want to focus on the third day. So let's zoom in a little bit more. We've got that GBP CAD daily chart, right? Again, think about the previous lesson about order pairing, right? We want to pair up the sell stops with the buy stops. Again, we want to focus on that second candle closing inside, right? We need that candle to close inside of the range. So we purge those sell stops, and now we want to be focusing on the third candle, which is highly likely to be an open low and then a high and a close, right? So that would be a classic buy day going for those buy stops. Now we can dive into the 15-minute chart, and this is what we mean by market maker models are swing points, right? We see a clear sell side of the curve over here and an original consolidation of a market maker model. So this is sell side of the curve, and remember, this is day number 2, right? The second candle in the swing low, which takes out sell side liquidity, which is the start of buy side of the curve, where this is where the smart money reversal happens. So after that smart money reversal happens, right, we want to focus on day number 3, which is either first stage and or second stage of accumulation for buy side of the curve. So importantly, right, we wait for the second candle to close inside of the range, and then we focus on the third day. Now what do we map out? As always, New York midnight opening price, right? We want to be a buyer below daily opening price. And think about order pairing again. We want to pair up sell stops with buy stops, right? So we're going to be mapping out premium and discount first of all. See where there is a short-term low in discount, which we can rate to do some order pairing. And if I outline this line over here, we've got a 15-minute stop hunt over here, right? So the third day, this would be the open low and then purging liquidity and then continuation up higher, completing that market maker buy model. Essentially first candle, second candle for the smart money reversal, and then the third candle for redistribution or reaccumulation. Now where would you get in on that third day? If you did not have an order below an old low, that would be a turtle soup, right? You can also trade the PD array matrix, right? If you see this as low of the day, we have a breaker, etc. You can take whatever you wanna do. You can go into the 1 minute and see if there's an opportunity in here, because low of the day should already be set over here in that swing point. Right, so for another example, we've got Euro USD daily chart, we've got SMT on the highs, right? Important. And then we have a higher time frame key level. So that's where you want those swing points to form, right? It makes it higher probable that we're going to move away from a higher time frame key level. So where does the swing point occur? Right, we've got candle number 1 over here, and then we have candle number 2 raiding the high of candle number 1 into that higher time frame key level. Now what is important after we take those buy stops and we want to target those sell stops, right? The order pairing, once again, it is important that candle number 2 must close inside of this range. That is a must. And then we can focus on the third day, which is this candle over here, taking out those sell stop in the end. So let's dive in to a lower time frame and see what that looks like. So we trade candle number 3. We want to be targeting the previous daily low first of all, right? That is target number 1, and then the candles range low of where the swing point occurred. That is target number 2. So over here we're diving into the lower time frame, right? We've got a 15-minute chart. As always, look for that range high and the range low, right? First day, and then the second day is the smart money reversal in that higher time frame key level, and from there on out we can start to look for opportunities. So the third day is actually this day over here. So we got a market maker sell model going on, right? How likely would it be that you would catch an entry in this example? And that's why we put this example here as well. Sometimes you won't get an entry and the swing point will already complete the market maker model very quickly. So that is fine as well. We trade the probabilities, but we really need to focus on that third candle in the swing point, right? So if you want to complete the market maker sell model, probably no entry. Could be on the lower time frame, maybe on the 1 minute you can find an entry here. But those are just the probabilities. Right, so now let's dive into time frame alignment for SMT and our continuation purchase, and then how to take an entry. We've got 4 models over here, 4 swing models. We've got a monthly swing model, and we're going to be looking for 4-hour SMT or continuation purge, and then 4-hour or a 1-hour change in the state of delivery order block, or 50 to 62% retracement level. Then we've got a weekly swing model, a 1-hour SMT we're going to be looking for, and or continuation purchase, and then a 1-hour or 15-minute change in the state of delivery order block, or 50 to 62% retracement level. Thirdly, we've got a daily swing model. So then we're going to be looking for 15-minute SMT and or continuation purchase, and then 15-minute and or 5-minute change in the state of delivery order block, or the 50 to 62% retracement. And lastly, we've got the 4-hour swing model or previous session high run into a 5-minute SMT and or continuation purchase, and then we're going to be looking for a 5-minute change on the state of delivery order block, or the 50 to 62% retracement level. So firstly, let's start with the monthly swing model into the 4-hour SMT continuation purchase. We've got a DXY monthly chart over here. So let's outline the premium and discount, right? The premium up here and the discount here. We've got that key level outlined. We're going to be focusing on that swing, right? We've got the first candle over here. Second candle takes out the low and closes inside of the range. That is important. Again, we need the second candle to close inside of the range. Then the third candle, we're going to be focusing on purging the high of that first candle. So if we dive into the daily time frame, it looks a little bit more clear, right? We've got that low formed on 8th of March, taking out those sell stops. So now we immediately turn into where do we want to pair up those sell stops, right? We want to pair them up with the buy stops on the high of the range. Now, why was this a high probability smart money reversal on that monthly time frame, right? Think back about those bonds, right? the triad, the SMT that happened on those bonds. You can see this high got rated on this bond, and then on this one we did not rate the high over here. So that makes it for a high probable smart money reversal in a key level. So we're diving in a little bit lower, right? We're going from monthly into 4-hour continuation purges. So what does that look like? We've got the monthly low sell stops being taken out, and then we want to aim for that monthly high where the buy stops are resting. We've got a break of structure over here, right? And then a continuation purge down here. So we're taking out a short-term low, purging the low, and then we want to look for continuation up higher. So again, what are we going to be looking for afterwards? We're going to be looking for a change in the state of delivery on the 4-hour or the 1-hour, and or we're going to be looking for a 50 to 62% retracement level. So what does this look like? If after we had the purge, we have a new range formed as well, right? So we can put our Fibonacci on here, and we're going to be looking for the 50 to 62% retracement level where we can take entry from. Again, we have a continuation purge here as well, right? The 4-hour lows get rated, and it happens the same over here, right? Short-term low rates those low, which is a purge for continuation up higher, hitting this breaker as well, right? So it happens in a key level. That is important. So let's go back again. What happens down here, right? So we're waiting for a monthly swing low to form, right? Second candle closes inside, and we're going to be looking out also for that 4-hour change in the state of delivery order block. This is where the highest probability order block forms. All right, so you can see that the order block is being used perfectly, and then a continuation purge happens down here. Same thing over here, right? Short-term low gets rated, so we can count that as a continuation purge. Push up again and again, breaker block up here, and then the continuation purge happens inside of this breaker below an old low for continuation up higher. So on the monthly time frame, sell stops are being accumulated down here, right? And we want to pair it up with the buy stops resting above that range high. So we're zooming in a little bit further, like the 1-hour chart over here. And we're zooming in on that 4-hour continuation purge, right? So we had that 4-hour order block over here, right? A change in the state of delivery. Now we had that 4-hour continuation purge. So we purged the low down here. Then what forms? A high probability order block, right? Because it is a purge of a low, and then we can see a push up above it. And now we've got that 50% to 62% retracement level is also a POI where you can take longs from. Right, so now we'll talk about the weekly swing model. So we're going to be looking for the 1-hour SMT and or continuation purges. So over here we've got a higher time frame chart of AUD-CAD. It's a weekly chart. As always, start out with mapping out discount and premium levels. We've got a premium order block over here, which is a higher time frame key level. And now we're going to be focusing on that swing high again, right? We want that second candle to close inside of the range. So how does that look like? We've got this candle over here, right? Range high gets rated, and then the second candle closes inside. So we always focus on the third candle or the fourth candle if the third candle did not take out the sell stops yet, right? So we're going to be focusing on that third candle from the swing high. So if we zoom in, we're going to go to the 1-hour chart, right? We're going from weekly to 1-hour continuation purges. Again, it is a market maker model, those swing points, right? And we wait for that second candle to close inside the range, so we know we had a smart money reversal already, so we can trade the redistribution or the reaccumulation phases on what side of the curve you are on. So we're on the sell side of the curve, obviously. This is a bearish example. We hit that high time frame key level, right? That weekly order block. Buy stops have been purged, so we're focusing on the third candle of the weekly swing. We can see there's a market maker sell model going on over here. We'll be looking for SMT, that is key, and 1-hour continuation purges, right? So we have SMT on these highs over here. Then price trades up, and then we can see over here we take out a swing high, a short-term high here, and it purges the high and then declines already. And we can see the same thing happening over here. We have a short-term high here, then price wicks above it, and then starts to decline afterwards. And also think about this purge, right? Think about the order pairing video. We have a rejection of the lows, right? And not an energetic close above it. So that's an indication that we're